U.S. Treasuries took down.
Listen up, Rebels. Rebel Leader here. Today with a Friday debrief, we're going to talk about the losses in the stock market this week and what you should do. So all around, all the retail investors and the heavily invested retail stocks, it saw major dips. We're talking back-to-back days. Probably in the first 3 days of this week, it was just down, down, and down. So there is a silver lining here that, we're seeing that there is some kind of support at these levels and before we bounce back up. But it's important to note that, where we're at companies like Tattooed Chef, Palantir, we're talking, all these like smaller and mid-sized companies that, aren't the big tech, right? We're talking smaller companies, they're the ones who are getting hurt and they're the ones that a lot of retail investors are invested in. So that's why we're feeling it more, even though the S&P 500 and all of these ETFs are at all-time highs, and you might see headlines saying that the stock market is hitting all-time highs and it keeps bouncing upper and upper, even though your stock's might be going down. Again, it's because you don't own an ETF like that. And the reason is because there's much more, yes, there's more risk, but there's much more gains to be had in these smaller and medium middle cap companies as they grow. Well, especially over the years, it becomes like a crazy compounding effect, and you really only need one of them to blow up, and they'll carry your entire portfolio with it. Versus S&P, spread out across 500 different companies, very slow moving that way. So, if you look 3 months ago, a company like Tattooed Chef was trading at $15 a share. Now it's trading at $20 a share. This is the thing. Even though it dipped, we're not where we were. You might have felt a little bit of losses. We're nowhere near where we were a few months ago. And that's something you should always keep in check about baselines. And that's why baselines is important. Again, I talked comparing your portfolio to a baseline stock, just one like a big tech. It can be Facebook, it can be Google. You have to choose one and kind of baseline your performance against and to compare. Because again, if you can just put all your money in Google and make more money that way, you might as well do that. And so now what we're seeing is mainly because of fears of inflation in the stock market this week, especially after, Jerome Powell came out and he said that inflation is gonna at least be elevated for the next few months. This worried investors, and if it doesn't come down soon, it's gonna cause a huge mess. And people are starting, to grow this fear of uncertainty. They don't know what's gonna happen if inflation doesn't come down, if it continues to rise in the worst case scenario, or it keeps just prolonging with no definite end. And again, uncertainty is the enemy of the stock market because investors like knowing, investors are very conservative. They like knowing the future and how things are going to pan out, right? This is why you have run-ups on big events like Amazon Day, Tesla Day. You have all of these, Apple Day. You kind of have these big run-ups because people are expected, they're excited, and then after that, they kind of know what to expect for the next, 3-4 months in the stock market, if not a year out. Same thing with earnings calls. This is why people kind of understand, why the biggest movers, what moves the stocks the biggest throughout the year, right? And it's because of these events that investors and analysts feel confident in predicting the future. So besides this, one movement down, which literally compiled, brought down every single, retail investor stock with it. As people get spooked, they kind of want to leave the stock, right? They want to take their gains out, right? Now the problem with this is, you're going to miss out on the whole slew of gains that we're going to have as earnings seasons come up for the second half of the year. And also, again, we're nowhere near, the bottoms we were in the beginning, like a few months ago, March, April, So kind of the best thing to do now is actually not to pull out your money and not even to hold. It's actually to buy the dip. And this is always the hardest point, but you can go back to my videos and if you've been here a while or you've been even watching the market for a while, you know that the market's gonna bounce back from this. It's gonna keep going up. So it's not a secret that what you should be doing now is not actually selling your stock or even holding and just taking these losses. The smart and prudent move is actually based on historical performance, is taking a company like Palantir, Tattoo Chef, which is hovering around $20 right now, and buying it maybe even just for the short term, because you're gonna ride this bounce back up, right? And you're gonna make 5% of your money, like that. Maybe like in 2 weeks, we're gonna see the stock's gonna bounce back 5%, and something like that. It's a good risk take. It's a good risk to take, and also you're adding into your positions. Whether or not it bounces back in 2 weeks, it's going to bounce back, maybe in a month, 2 months. So it's still a good, risk to take. The risk to reward ratio is very high. And again, if you don't want to take these risks, you don't want to take the volatility. This past week, guess which companies are riding the stock market higher? The S&P and all these ETFs that we're talking about. Companies like Apple are now hovering around $150. Amazon, Google, Facebook. These companies are breaking all new time highs every single day, every single week, no matter what's happening in the stock market with these retail investors, no matter what news are happening. That's something to think about. These large cap, big tech stocks, they just keep going up and up and up. Of course, they're going up by a small percentage every day, but they're not going down, and that's something to keep in mind as well. 1% a week, that's plenty. That adds up over the year, right? And that is kind of how you want to attack, this week. Kind of stay calm, kind of see where your losses really are. Are your losses on pure gains that you've gained over the past few months? And it's really nothing to worry about. And again, earnings season, and where we see the travel stocks have their earnings, that is going to be the biggest indicator where the stock market goes next. Not a few red days this week because inflation fears and retail investors don't know what to do. Rebel Leader over and out.